So folks, before we dwell into another set of indicators, let us talk about a very interesting concept around RSI known as RSI divergence. If you have not watched the video on RSI, I would request you to first go and watch the video on RSI. The link of the same video is given in the comment section. Divergence. To begin with, let's try to understand what we mean by divergence. Divergence simply means that two variables which should be in sync is not in sync. Which means, let's say if your price is going up, and as you know, when the price is going up, your RSI is also expected to go up. But with the increase of price, if you see the RSI is actually falling, that means that these two variables are not in sync and there is a divergence. Similarly, if your prices are going down but your RSI is going up, that is also an indication of divergence. These two variables, which typically would be expected to be in sync, are not in sync. So whenever you spot a divergence in the RSI, you should never ignore that, because it would give you meaningful insights in terms of the probable price action. So let's look at RSI divergence further. As you can see on my screen, divergence is a simple mismatch between two variables which is otherwise in sync. A positive divergence will occur when your stock prices are coming down but your RSI is moving up. And a negative divergence will occur when your stock prices are going up and your RSI is going down. Don't worry, it's not very confusing. Let me take some examples and try to elaborate this further. As you can see on my screen, these are the typical rules for RSI divergence. So if you see, when your price is going down, forming a lower top, lower bottom formation, your RSI is giving you a higher bottom formation. This is a classic example of a positive divergence or a bullish divergence. Conversely, if your price is going up, forming a higher top, higher bottom, higher top, higher bottom formation, your RSI indicator is giving you a lower top formation, which is also known as a negative divergence or a bearish divergence. Taking an example, on my screen I have the chart of Fortis Healthcare on a weekly time frame. And if you notice, the stock was coming down from this level and it came down forming a lower top, lower bottom, lower top, lower bottom formation. But if you look at the RSI, your RSI gave a higher bottom formation, which is indication of a bullish or a positive divergence. And if you notice, after this bullish divergence was spotted, the downturn took a momentary pause and the trend reversed and the stock price started going higher. Again, it comes back to the calculation of RSI. If your RSI is going higher when the stock price is going lower, it would simply indicate that your bears are losing control and the bulls are started to gaining. If you try to understand this positive divergence further, you need to go back to the formula and calculation of RSI. RSI typically takes relative strength into consideration, which is the ratio of the average of up moves and the average of down moves in the defined period. And if your RSI is going higher or rising when your stock price is falling, it simply indicates that your bulls have started to take control and the bears are losing their control. And there is a high probability that the trend is expected to reverse. So whenever you spot a RSI on a weekly time frame, you can go to a lower time frame like daily or 4-hourly chart and you can try to mark your support and resistance zones and you can define your entry and stop loss. And you can be a part of this phenomenal run on the upside which subsequently happened. Taking one more example, which is that of a negative divergence. If you look at the chart on my screen, I have the chart of Multi-Commodity Exchange or MCX, which was in a phenomenal bull run during this period. There, it was forming a higher top, higher bottom, higher top, higher bottom, higher top, higher bottom formation. But in this region, when it again formed a higher top, the RSI actually formed a lower top. This is an indication that this uptrend may come to a pause and the trend may temporarily reverse. And if you notice, this was followed by a good correction in the stock price where it started forming a lower top, lower bottom, lower top, lower bottom formation. So when you spot a negative divergence, it is time to be cautious around your long position holdings, and you may want to identify short selling opportunities as well. However, don't jump into taking a trade just because you noticed a divergence in the RSI. It is one of the indicators which will help you identify the trend or predict the potential change of trend. Always make use of your basic indicators like support and resistance lines and trend lines, and the other indicators like moving averages or MACD, which we would be covering in the subsequent videos. After you make a complete picture and you get a complete story, that is when you start identifying your trading opportunities. A few key points around RSI and RSI divergence. Divergences are very powerful indicators, as we saw in the recent examples that we covered. But divergences can fail. After a stock gave you a positive divergence, it may still continue the downtrend, which is where tools like moving averages will come into picture and they would be your guide. Similarly, if the stock is giving you a negative divergence, the divergence may fail and the stock continues its upward journey. That is where again tools like moving averages will come into your rescue. And as I said earlier, divergence analysis should not be your only indicator or the only reason why you are taking a trade. You apply other indicators like trend lines, support lines, resistance lines, moving averages along with RSI to take a more informed decision. Use RSI to add an edge in your trading decision, not to identify and define a trade. And whenever you spot RSI divergence on a higher time frame, never ignore that. Always make sure that you are able to follow that chart and try to identify what exactly is happening with the trend. Because whenever the trend is changing, you would be able to take a very good entry in that particular stock. So folks, I hope you are now able to understand the concept of RSI and RSI divergences, and you would be able to use it to your advantage in your trading and investing journey. Stay tuned and watch out for the next video series where we will talk about a lot of other indicators which are very useful and very insightful. Thank you.